It seems like there is a lot of redemptions, but this is something that happened up to the fourth quarter of last year. We're in a new year, and we're really only hearing about the amount of redemptions from the fourth quarter now.
It's important to clarify a few things. First, Bill Ackman has made some enormous blunders. Valiant, clearly. Herbalife is another one. But the other thing worth clarifying is that this is not a stampede of money out of Pershing Square for structural reasons. That sounds kind of wonky, but investors are limited in the amount of money they can take out of the firm in any one quarter to 1/8 of their investment. So not only are we talking about 1/8 of any individual investor's capital invested with Pershing Square, we're also talking about less than 50% of the money Bill Ackman oversees in the Pershing Square vehicles. And let me be clear, there's about $8 billion in total. $4 billion of that is in Pershing Square Holdings. That's the publicly traded vehicle. What we're talking about here, Vonnie, are the private funds. The private funds in total have about $3.25, maybe $3.5 billion of outside capital and about $500+ million of Bill's capital. Bill's capital is going nowhere, so we're really talking about $3.25 billion, of which only 1/8 can leave in any one quarter at any one time.
Exactly. And if we were to look at this quarter's performance, and we knew about Herbalife and we knew about Valiant.
We did.
This quarter has not been bad in terms of at least the new investments.
Well, that's true. Furthermore, I should add that of the money that is walking out the door, the person whom I spoke with, who's close to Pershing Square and is familiar with the way that Bill is thinking and what he knows, said that at the moment anyway, and of course this is subject to change, it's the investors who've been with Pershing Square for the shortest period of time, the institutional managers like Blackstone and JPMORGAN Asset Management, for example, that are leaving. The longer-term investors, the high net worth individuals who were with Bill in the early days and made lots of money when he was knocking it out of the park, so far are staying put. And if you think about it, 1/8 of that $3.25 billion, it would take 2 to 3 years for all of it to leave.
Exactly. And the most recent campaign, or the most recent activist campaign at least, we're not quite sure if he's going to be activist in other companies going forward, but the ADP campaign, he raised money for that. He raised a substantial...
There's there's a $500 million special purpose vehicle dedicated to ADP, and there's $3.5 years, left before any of that money can leave. What's really important to emphasize here, Vonnie, is what Bill's going to do about this now. He's not going to go into investor relations mode. That's what this person told me. And handhold investors and persuade them, implore them not to take money out of the fund. No, if the $3.25 billion ends up leaving over the space of 2 to 3 years, fine. He's going to refocus on the one thing that a hedge fund manager should be doing, which is investing. And if anything, he's going to buy back the shares of the public vehicle, Pershing Square Holdings, at a discount using his own money, some $300 million.